2.49% fixed mortgage here in October 2023. Would you like one of those? Well, we just got one for clients about 3 weeks ago, and we're about a week and a half away from settlement. And I'm gonna tell you how you could get one too. Let's be real. How did it happen? It's an assumable mortgage. You've probably heard about it, but maybe you haven't thought about all the details that go into making it happen. Here are three that you need to think about, and actually one more for a particular assumable loan that maybe you hadn't thought about because it's just not something you do, right? So let's look at point number one. You gotta find a home that has an assumable mortgage, be it an FHA or VA, right? There aren't as many out there because the people with the 2.5%, 3% loans, they aren't selling much right now. That's why there's low inventory in the market. So you find that assumable FHA or VA loan. What's next? Number two, and this is important, you actually have to like the home. It has to be a home that you were actually looking for. If it's not, and you're buying that as a home that you're gonna live in, then you need to really like the home. It doesn't change. We've talked about this before. Do you like the home? Don't buy because mortgage interest rates are rising or they're falling. In this case, you're kind of catching what was an old fallen rate, right, of 2.5%, 2.49% in my client's case. But do you like the home? They really liked the home. It fit. It was the needle in the haystack. But I could see lots of people buying homes that they don't really like because they got a great rate by getting an assumable mortgage. Number three, this is another big one. You have to be able to make up the difference. What difference, Mark? The difference between the contracted price and the balance owed on the assumable mortgage. So let's use some pretty real numbers here. In this case, close to the property I'm dealing with. Purchase price is $850,000 and the balance owed on the assumable loan is $600,000. Well, that's $250,000 gap, right? When you go to settlement, right, you got to settle all the numbers, all the debits and the credits have to match up, and the seller's got to get paid off. So that means there's $250,000 of cash that you'd have to come up with as a buyer. Fortunately, my clients were able to do this. But if you can't, well, what are you going to do? Well, you can't assume the loan. It's just that simple. So you need to make sure that you have the cash to make up what that gap would be. I wasn't expecting it to be that big of a gap for a less than 5-year-old home, but we had appreciation in this marketplace. So that's what happens. So what's the bonus point that has to happen for someone? If it's a VA loan, number four, you need to make sure the seller is willing to get rid of their VA eligibility because it stays with that home. So they may not have thought about that when they're selling the house. Oh, we have a low mortgage rate, and we can assign that to somebody else, but then we lose our VA eligibility. So they will have to sign off on that. Their lender will make them sign off on that in finalizing the process. But that's how you can get a low mortgage rate in today's world, which is very coveted. But remember the 3 points and the fourth one, the bonus. Number one, you got to be able to find a property that is assumable, FHA or VA loan. Number two, you need to like the home. Don't just buy a home that you're planning on living in for the long haul, unless you're planning for a short stay and then you're going to rent it. That's something you have to deal with in your own mind. I'm not going to tell you what to do there. Number three, you have to have the cash to make up the gap. So find that out early. And number four, if it's a VA loan, you need to make sure that the seller is indeed going to assign that VA eligibility to stay with that home so they lose it. All right, so I hope that helps. You need help with that, let me know. It's worth looking into, but it's not worth obsessing on, because number one, if you're buying a home to live in, you have to like the home first and foremost. Take care. Talk with you soon. Bye.